There's one trading concept which will tell you more about what the market is doing right now than pretty much anything else, and that is market momentum. When you can read momentum and you understand what it's telling you, you'll be able to take considerably better trades, and you'll also have the benefit of being able to avoid low probability trades. You'll have more confidence and clarity in your work, and overall, you'll achieve better results. So in this video, I'm going to teach you everything around candle momentum and market momentum and show you how you can start incorporating it into your trading. So with that said, let's get to it. Now the markets move based on a large battle between buyers and sellers. When there is more buying than selling in a market, the markets will go up. And when there is more selling than buying in a market, the markets will go down. This is literally the reason why the markets move. Now, being able to read momentum will give us insights into who is in control, whether it's the buyers, the sellers, or if we're in a phase of indecision where there's no control, we'll be able to see that too. And the ability to read into each of these phases is incredibly useful, even the phases of no control, as you will see in this video. To read market momentum, we will be using candlesticks. Now, a candlestick, you probably already know by now, is made up of three parts. We have a body, and then we have a lower wick and an upper wick. The body shows confirmed and closed prices within a given time span. So if this was an hourly time frame, we would see that at the start of the hour, the market opened here. At the end of the hour, it closed here. The wicks then show rejected prices, which means the market attempted to go higher and it attempted to go lower, but it wasn't able to close this low or this high. Now, each component of a candlestick, the body and also the wicks, can give us insights into the momentum of a market and tell us whether the buyers or the sellers are in control, which is of course what we need to know if we want to take good trades. So starting out with the most simple format, we're going to look at candle body momentum. Now we can see two different candlesticks here. We have this candlestick, which is a large bullish candlestick, and we have this candlestick, which is a small bearish candlestick. Now this candle here, the bullish one, this is a high momentum candle. Because we have a large discrepancy between the open and close price of the candle, we can see that the candle has covered a lot of ground. So if we were looking at a market and we wanted confidence to buy, this candle would tell us that the buyers are likely in control. Now, obviously, this will be subjective and dependent on the other candles around it. But as a generalization, if we see a large uninterrupted candle like this one, we know the buyers are clearly in control. Now, this selling candle, however, is small, and there's not much of a price difference between the open and the close of a specific hour, which shows us that not much movement was able to be created. With only a small amount of movement taking place within this hour, for example, we know that there's not a lot of selling pressure here. So we may have sellers and buyers at almost equal levels. Sellers may be in control, but only very lightly, and there is resistance on that selling with buyers pushing back against this. So what we would be looking for here is through high momentum movements where we have clear direction, we would be looking to move with this momentum. So in a market that was continually printing large bullish candles like this, we would be confident to buy and we would avoid selling. Now, in a market phase like this, where we have only very small candles, we wouldn't be so confident to sell here because we know that the sellers are not managing to push the market down without facing resistance from the buyers. Buyers are pushing back here, sellers are not able to gain ground, so selling in a market that is printing multiple small candles like this won't provide us with much confidence to sell because we know there's going to be resistance from buyers. So now adding wicks into the equation, here we can see on the bullish candle, smaller wicks either side. This shows us that yes, the buyers are in control because there's not a huge amount of selling pressure pushing down on this market. If we'd seen a huge wick at the top of this candle, this would actually indicate something different. This could potentially indicate the end of buying pressure because it's showing that the market's attempted to go considerably higher, but a significant amount of this upward movement has been rejected by price, which tells us that maybe somewhere up here, the sellers are starting to take control of this market. Now, this candle with large wicks either side shows a phase of indecision. This is basically an area in the market or a price level where buyers and sellers are pushing at the market with equal strength, and there's no clear direction, no clear control from the buyers or the sellers. Now, movements like this are generally going to be followed with large up or large down moves, but it's hard to know which because there's no clear direction. As we see, the market opened here. We attempted to go high, but we got pushed back down. We attempted to go low, but we got pushed back up. So when we see large wicks either side of a candle, this will show us that there is indecision and there's no clear control from buyers or sellers. Now, if we had a small candle body with a very small lower wick, but a very large higher wick, this would show bearish pressure. So this actually does show high momentum, even though the candle body is only small. Because we can see that this huge wick rejection we have above shows the market's attempted to go considerably higher, but sellers have brought the market all the way back down. Add that to the fact we see a bearish close on this candle, meaning we closed lower than we opened, and we can see that quite obviously somewhere up here is a significant amount of selling pressure coming into this market. So if we saw a candle like this, given that it was at a reasonable point in the market, we would then be quite confident we would start to see bearish price action commence, because this candle shows a shift in control from potential buying into a significant amount of selling. So to recap on what we've covered so far, if we have a large candle with little to no wicks, that is a high momentum candle, which indicates that buyers or sellers are clearly in control. In this instance, being a green candle, this would mean the buyers were in control of the market. Now, a small candle with little to no wicks just simply shows that there is not clear direction in this market. Or there may be clear direction slightly. For example, this would show selling direction, but it's very, very weak, meaning that there are buyers pushing back up at these attempts to go lower. And if we have a large candle body, but we also have a large wick one side of the range, that also shows high momentum. And this actually indicates a momentum reversal. So a strong candle body would just show momentum continuations because we know that the buyers are in control and they're moving significantly. A large wick, however, shows us that sellers have kicked in somewhere up here and are now bringing this market back down. So we could potentially expect to see this candle follow on into new bearish price action, or at least indicate the start of a reversal from bullish to bearish in this market. With any candle, if we have equally large wicks either side of the range like this, it simply shows indecision. Yes, we managed to make some ground, but there's a huge amount of selling and a huge amount of buying above and below the range, which means essentially we are stuck in a phase of indecision where the market is only going to be moving sideways until we see a significant candle without the wicks. For this, it really doesn't matter if the candle is large or if the candle is small. Large wicks either side of a candle body are always going to show indecision, whereas large wicks only one side of a candle is generally showing a momentum reversal. So a large wick like this would indicate that buyers are entering the market down here, and the momentum is likely to start shifting into bullish price action. So candle momentum can actually be viewed over multiple candles as well. We'll see some live examples of this in a bit, but let me run through it now. Now we're seeing two market phases here. We have a high momentum downward market phase, and we have a low momentum downward market phase. Now you can see in this example, we have large candles with strong closures and very little wicks either side of these candles. This shows us that sellers are continually in control and there's very little resistance from buyers. Now, of course, there is some profit taking and some buying taking place, which is why we have these small wicks pushing the market back up. There's never really going to be a phase in the market longer than a minute or just a few seconds where there's only one side transacting, meaning there will always be some level of buyers, but a phase like this shows a significantly larger proportion of sellers than buyers, okay? So in a low momentum market like this, we're seeing a little bit less pressure from the sellers in comparison to the buyers. So in a phase that is moving down like this, where we have large wicks around candles, the candle bodies are only small, and sometimes we have some pullbacks a little bit higher, this is going to show us that yes, sellers are in control, but the buyers are providing resistance. Buyers are pushing back against these selling orders at pretty much every level down this move, which means that although buyers have not formed enough pressure to push the market back up yet, we are definitely at risk of potentially reversing, which means selling in a range like this is going to be less favorable than selling in a market like this. Now, when we see strong bearish momentum like this, pullback opportunities that we get are going to be more favorable to sell into because we know the sellers are in control. If we saw this market reverse, we might not want to sell here because this could actually be the start of a reversal, as indicated by the wicks and the low selling pressure. Any pullbacks we get here could actually be a change in control from selling into buying. So instead of pulling back and then selling off more, as we would expect to see here, we may actually be leading into a new bullish phase. So those are the basic concepts of market momentum: high momentum candles, low momentum candles, high momentum market phases, and low momentum market phases. Now we're going to move over to the charts, and I'll show you a few different examples of where this comes in inside of your trading. So to kick off explaining this in real markets, we're going to look at the DXY, the US dollar index. We can see here that we have reasonably large bullish candles with small wicks, which basically means the buyers are in control. Now, any bearish candles we get within this range are significantly smaller than the bullish candles, and you can see they generally are coming with wicks at the bottom, which shows buying pressure coming back in. So as I said, we will always have attempts to pull lower, but they're not always going to come through. Now you can even see in this bearish push that we had, these candles have got significant downward wicks. This one here showing rejections coming in. This one here again showing more rejections coming in. And this is then followed with a bullish engulfing candle, which is basically a candle that completely swallows the previous, showing us the buyers may be in control once again. And then we follow through with more large bullish candles and only small bearish candles. So through this phase, we can see by looking at just the candle momentum, the market is clearly moving to the upside. The buyers are in control with these long, strong candles and little to no wicks, and the sellers' attempts are continually being rejected and pushed higher. Now, eventually, we reach this phase of indecision, and this is where we start to see a reversal occurring. You can see that the buying candles are strong, but then the sellers' candles are now starting to get a little bit stronger as well. So we move into this phase of indecision, which would be your ticket to get out of buy trades and potentially plan ahead for positioning into short positions. Now we can see at this point, this is exactly where the sellers took control of this market, these two very large bearish candles with very little rejections underneath. This is where we actually go from bullish momentum into indecision into bearish momentum. And following these large candles, you then see phases of small bullish candles followed by large bearish candles. So we now know these sellers are definitely in control. This is a phase of the market we would then look to continue selling through until bullish momentum pick back up. Now we can see small bullish momentum, so selling would continually be the right decision to make through this movement. Eventually, we do see a kick up in the bullish momentum with this large bullish candle here, and then a follow through with these large bullish candles with little to no wicks. And this leads us into another phase of bullish price action. And we continue moving up through this range with the one exception of bearish candles being here. But what do we see following on from these bearish candles? We see an indecision candle. So the indecision candle that kicks in down here at this demand zone then leads us back into more bullish price action. So there's a good simple insight into how we can read this momentum to move with the market. Here's another example looking at EURUSD. Tell me by looking at this chart, who's in control? I think it's quite clear now that the sellers are in control of this market. The reason we can say that with confidence is that we have these large bearish movements, but the buying movements, the pullbacks, are drawn out essentially. They take a while to pull back to any reasonable level, and then they are followed by a new large downward momentum move. So let's break into one of these a little bit deeper. Now, if we look at this bearish phase here, we can see that although we did have some resistance from buyers, which took place around these points, for the most part, we have these large bearish candles with little wicks. Okay, this one's not perfect, but we definitely see the sellers are in control here. There's no resistance from buyers under this level, and even the resistance from buyers up here was taken over by sellers. Now, another thing we can note about this market, if we zoom into this area here, is that we have wicks, but these wicks are only at the top of the candles. Now, wicks act as rejections. So by seeing wicks at the top of the candles, that tells us that this market has attempted to go higher 1, 2, 3 times, but every time the sellers have come back in and pushed the market down. Now, the absence of wicks at the bottom, we only have one here, shows us that there is not much buying coming in at this level. We have multiple rejections of higher prices, but we don't really have any even attempts at lower prices to be rejected. So we've attempted to go higher, rejected, attempted to go higher, rejected, one more time, and then because we haven't had any resistance from buyers here, we've actually just seen significant selling commence from that point. So in a nutshell, this is a pretty quick, pretty strong bearish phase. Now let's look at this bullish phase on the way back up. What do we notice from this one first of all? It's pretty much a clean push down, right? This bullish phase though, this pullback phase, is actually a very slow grinding pullback back up. We pretty much have a whole trend in itself where we are forming a high, then pulling all the way back down to the low, new high, pulling all the way back down to the low. And another thing we note is that at the top of every one of these movements, we've got pretty significant wicks. Let me just clear the chart real quick. We have wicks here, we have wicks here, and even on this final point before the new sell-off, we have wicks once again. Now these wicks, as we know, show rejections of higher prices, and the large bearish candles that are coming out of each of these movements is pretty much reverting all of the bullish price action we've made. So it took a long time to get from here to here. In this movement, it didn't take very long to get all the way from the high down to the low. This obviously shows us there's a lot of selling here, but there's not so much buying here. And any buying that does take place is quickly being clouded over by the selling that follows. So when we have a fast downward move, followed by a slow upward move, this tells us that those sellers are still in control, and we are likely to follow through with a new fast bearish move like this. When we lay that on the chart, you'll see that is pretty much exactly what happened. So following on this trend then, here's an actual trade opportunity. What can we see just here? Well, we see once again a nice strong bearish movement. We have a big bearish move down. We have a small attempt to come in from buyers here, followed by a new big bearish move down. And then we have a bullish move. But is this a high momentum bullish move? In reality, no, it is not. Because every time we push up, we then pull back a significant amount of the range. So this candle alone looks pretty bullish, but then we're followed by an incredibly bearish candle. Once again, this candle alone looks pretty bullish, but it doesn't lead into a clean phase of bullish price action. Instead, there's a new phase of indecision before we finally make the push up. And then after one more candle, the market momentum totally dies once again. So this upward move is considerably lower momentum than this downward move, which tells us that the sellers are still in control. Now, I would bring in concepts of supply and demand. I would mark up this supply zone and indicate that when the market trades into that level, we are probably going to start leading into some shorts. And even the continuation into this zone still has weak momentum. So we would actually look for selling opportunities from this point if we wanted to sell here, and we would then target lows in the trend to continue this movement down. Now we can do this with confidence because we are seeing the bearish momentum, which is considerably stronger than the bullish momentum. If we know bears are stronger than bulls, we know the selling is stronger than buying, therefore the market is likely to move to the downside. Now this trade also came with a momentum confirmation. We can see that after we formed this small range where the buyers were very much struggling to get higher, we had two strong bearish candles with very small wicks, which indicates a change in the trend because we've broken back under the range. So if we wanted to be extra safe about this setup, we could, instead of selling directly at the zone, sell here now that the momentum has started to be taken over by the sellers once again. And following on from this, we see a new bearish move in the market, which leads us into new lows. And throughout all of this, we are continually having strong bearish down move, slow, choppy, grinding up move. Strong bearish down move, and that is how we know that the sellers are in control of this market, and this is a market that we want to be selling. So now let's take a look at using this momentum to find a trade. For this, I'm going to go back to a trade I took in February on EURUSD. This is a lower time frame trade. We're looking around the 30-minute. For clarity, I was using liquidity and supply and demand for this position, but we're not going to go into those. We're going to focus purely on momentum because it doesn't matter what concepts you use, momentum will be useful. So what do we see here? We see a very strong bearish down move. Then we move into a very slow upward choppy phase. There is then one push from the buyers, which is a pretty reasonable momentum up move. Yes, we've got a lot of wicks. Yes, we've got some indecision throughout, but we made a significant movement up. However, when we reached the top of that movement, momentum once again died, and we started moving into a pretty much flat sideways phase. Now the market did attempt to go higher once more, followed by this large bearish wick, and this bearish wick was then followed through with a break of structure, which was a strong candle body. So as we see here, this large candle body pushed us below previous structure. We did have a bit of a wick, but then the bullish candles that followed out weren't too strong. We did see wicks and small bodies on these moves, and then once again we had some significant wicks in the highs here, showing a secondary rejection of buying. Now, this rejection of buying shows us that sellers have entered the market, so we could actually look for a short opportunity from pretty much up here if we wanted to. And this is where I got my short in, was from the supply just up here. Now, a secondary opportunity also formed once again. We followed with a very bearish phase down. We had a large bearish candle, we had a bit of an indecision candle, but that was followed once again by a large bearish candle. That large bearish candle closed us beneath this low. So now we could use supply, the same concept, to follow through with price, because we know that the sellers are taking control of this market due to these strong bearish down moves and the fact that after the buying move, all of the bullish momentum had died out. So this zone here becomes once again a good place to sell from. And allowing the market to play out, you will see exactly what happens. We trade back into that zone, more wick rejections, and then the market sells back off to the downside and trades us into some recent lows, which is where we use for a target. These very same concepts, I believe the next day, also saved me from taking a losing trade. And this is how we can use momentum to avoid losses, bringing our win rates up overall. We see a reasonably strong bullish move, but with the same formation. We lose all momentum, we have large wick rejections, and then we follow through with an even stronger bearish move. So this momentum was telling me we may be in a position to continue selling here. So I thought, okay, following the same concepts, if I use this supply zone, I could execute a short once the market reaches this level. Because we've got strong bearish momentum, we know that sellers are generally in control of this market right now. So my plan was to sell from this supply, and you'll see in a moment how I managed to avoid taking a loss here using nothing but momentum. Now we can see we started to form a small range at the bottom of this move. We had lost the selling pressure by this point. We hadn't really picked up too much significant buying pressure. The market was simply ranging. However, after we came down into the lows here, we had this candle. What does this candle indicate? This is a significant bullish candle. This candle has not only engulfed this entire previous range, but it's closed with pretty much no wick. So we know from this point, we saw a huge injection of buying pressure into the market. Now, obviously, because we're trading in a battle between buyers and sellers, if I know there's a huge amount of buyers coming in here, do I really want to sell anymore? Well, the answer is no. So I removed my order, and as you will see, that move saved me a couple of $1,000 because we had a very slow grinding pull up. But this big candle here indicated a change in the trend enough for me to avoid taking the sell here. And as you can see, my stop would have been hit as the market did trade over the high. So there's just two examples. Now, momentum plays a part in every piece of market analysis I do, and pretty much every trade that I get into. Another incredibly important use of candlesticks and candle momentum is validating breaks in structure. So let's say this is a previous high. If we break this high, we are likely to then lead into continued bullish price action. So we may then see a pullback and continuation. But we need a way to validate that this break in structure is actually valid and is likely to continue through with new bullish price action. Now, if the market was to close above the structural point like this with a candle body closure, that indicates that this is indeed a valid break, which means if we were to then pull back to demand, for example, we could confidently buy because we would know that the trend is now intact, the trend is moving bullish. We've broken through a high and we formed a higher high with a candle body closure. Now, in an instance like this, it doesn't really matter if there is a wick above. As long as the candle body closes, it shows that the market is closing higher than it has previously, which tells us the buyers are in control more now than they were at this previous point. However, this is the important thing. You can never confidently treat a candle wick as a break of structure. So if we saw the market moving like this, for example, we would actually be seeing here a significant rejection in price from this high here. So the market attempted to go higher, but instead has been pushed all the way back down. And instead of a valid break, this can actually be what we call a liquidation, where the market has reached over this high to trade into any collection of orders that sits at this high. And now that it's reacted to those orders, we may see the follow through momentum, which could indeed lead through with a big bearish candle, which could wipe us out if we started to buy following this high being swept. So a candle wick like this, instead of showing a willingness to close higher as a candle body would, is actually showing us a price range that is being rejected. Okay, we've attempted to go higher, but there's so much selling pressure at this level that we're just getting pushed right back down. And a movement like this is more likely to lead into a bearish phase of price action than a new bullish one. So let's take a look at this market, for example. We could anticipate with this being the next significant low, if the market was able to punch through this level, that would be a break in structure, which could lead us into new downward price action, okay? But as you are going to see, when the market trades through this level, it actually just wicks all the way back up and closes. And we cannot treat a wick like this as a break of structure because it is clearly showing a huge amount of buying pressure commencing from this level. And as you can see, this movement was followed by a large upward push. Momentum should be a staple part of your trading system. There is no argument against that. It will help you take better trades and avoid taking those low probability positions that you get yourself caught up in. Now, if you want some help building out a trading system and optimizing your trades to take near perfect setups totally for free, head over to the top link in the description. You can check out my 7 steps to profitable trades course there. Like I say, it's 100% free and it's going to give you some massive value. So thank you for watching. Check out that free course and I'll see you in the next video.